what comes next.
And joining us to discuss, member of the House Financial Services Committee, Tennessee Congressman Andy Ogles. Congressman, thanks so much for joining us. So will it help or will it hurt America's banking system?
Well, I think what you see, what's taking place over the weekend is the government trying to calm the markets to reassure everybody that your money is going to be there. I think time will tell. I'm cautiously optimistic that we're moving in the right direction, but we'll see. I think there's more pressure and stress on some of these smaller regional banks where they had too much cash on hand that was in bonds. And then as interest rates continue to go up at an aggressive pace, those depositors were looking for better returns on their money. And so you start seeing those liquidity issues on those smaller banks, which really speaks to their risk tolerance and having too much cash and bond dependence.
I wanted to point out something Vivek Ramaswamy said earlier today on Newsmax. I know we showed this last segment, but it's a really interesting soundbite. I wanted to get your thoughts on it. Here it is.
I think they did not. I think this is crony capitalism all the way down, because here's what happened. SVB did take excessive risk due to mismanagement. And you know who else took excessive risk? Were a bunch of tech companies in Silicon Valley that put way more money in SVB than they should have. The way capitalism works is that people are held accountable for their own decisions. But instead, you know what happened? The government stepped in to save them. And here's the dirty little secret. Silicon Valley Bank and their cronies for years argued that banks like SVB were subject to looser requirements for capital, looser risk requirements, precisely because they said, we're never going to be systemically important, so the government will never have to save us, so we get to take more risk. Well, guess what? In their hour of need, they call on the government for help anyway.
Yeah, so Congressman, I want to get your thoughts on that, because nobody wants to be the administration that doesn't back up a bank and it goes under and there is a contagion, right? And so that's why they stepped in. But there are a lot of people saying, wait a minute, we shouldn't have to keep bailing people out.
No, I totally agree. And his assessment was spot on. Look, it was management that put this bank in this position and other banks that may be at similar risk. And so the question is, what is the role of government? First is the role of government is to create a stable and secure financial system. Now, the question is how far do we go in helping these banks or these institutions? Time will tell. And I think you're going to see, we had a conference call earlier today. We had one last night looking at next steps and just keeping abreast of the situation. But, I have similar concerns. This bank was largely a climate bank with some risky investments. And is it really now keep in mind, with the loan program that they're going to roll out, it's not going to hit the taxpayers tab per se. But what it will do is any institutions that are paying into the insurance fund, they're going to have an assessment, which will ultimately be passed down to the consumer.
Right.
So at a time of inflation, at a time of recessionary pressures, what does that do to the long-term marketplace and the competitive nature of the banking industry? Yeah. There's a lot of questions here, and I think you proceed with caution and be careful of the unintended consequences.
I appreciate all your comments. I did want to ask you, should there reach a point where you'll bail out depositors and maybe even companies that have payroll to care about, to take care of, because they may have more than $250,000 to guarantee from the FDIC. They got to run a business, though. They need a lot more money than that in many cases. If you bailed them out, then maybe people would feel like, okay, you're keeping the businesses through no fault of their own, happen to be in a bank that's not managing its assets well.
Yeah, again, where does it stop, right? And so at some point, you're going to have to draw a line in the sand and say, this is what we have to do to stop and forego any sort of contagion in the banking system and an ultimate collapse. But beyond that, this is going to be a painful lesson, I think, for the marketplace and for some of these investors in these banks. But we have a free market, and I think this is largely the result of a Fed that kept interest rates too low for too long, that overheated the economy, and then now they had to accelerate interest rate hikes. And again, this should have been expected, that you're going to have some sort of cash withdrawals as people were seeking better returns. And so my question is, when you look at it afterwards, is why weren't the regulators anticipating this?
Right.
Why weren't they, maybe they got the timeline wrong, but why weren't they looking for these types of problems?
Especially a bank this big.
That's right.
Okay, Congressman Ogles, thank you so much, sir.
Thank you. Have a good day.
You too.